Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone, and thanks for tuning into this week's episode of the Security Token Show. We're coming to you from our studio in sunny Miami, Florida. I'm your host, Kyle Sonlin, and joined by my co-host and business partner, Herwig Konings.
Glad to be here.
And so before we get started with this week's episode, I would like to share a word from our sponsor. And so this episode of the Security Token Show is brought to you by Relio. Relio is a security token issuance platform focused on disrupting capital markets by tokenizing real estate, equities, and venture capital using blockchain technology. Now, the firm successfully closed its $4 million security token sale, powering the RST security token, which is set to begin live trading on Uniswap soon. And Relio is working with top-tier clients, including a multi-$100 million fund and a prominent real estate property in New York City. The firm's cross-chain mainnet is actually set to go live as well next quarter. With its new funding round complete, Relio is poised to take advantage of the explosive potential of the security token industry moving forward. If you're interested in learning more about Relio's technology or about the platform itself, you can check out relio.fund, REALIO.FUND, to learn more.
Absolutely. Thank you, Relio, for making this show possible. And Kyle, let's get into it. What you're going to expect today on the show is we're actually going to start off with our companies of the week. So Kyle and I are each going to choose a company that we felt made the most impact in the industry last week. Moving into our top 5 news, all the things that you need to know that's happening, followed by my industry updates, a secondary report on the trading activity followed by Kyle here, and then of course our main topic, which today we're actually going to be getting into why security tokens are actually safer than cryptocurrencies. I think a great hot topic, I think, for many. But with that, Kyle, let's get into it. Who is your company of the week for episode 93?
So my company of the week is a crucial financial infrastructure player in one of the largest security token deals that we've seen come out ever, really. And so we talked about this deal before in terms of Exodus raising a $75 million Reg A plus crowdfund sale. They were able to sell that to retail investors. They were selling equity in their business via a security token. This was huge news for us. We covered it last week on the podcast. And I wanted to give special recognition to Securitize as my company of the week this week, who really provided so much of the infrastructure to allow this to happen from a financial perspective, as well as blending that financial world to the blockchain industry. And so just as a quick highlight, what Securitize was really the services they provided for this deal were twofold. The first one was most of the compliance measures for Exodus as they onboard their investors. Securitize uses the Securitize ID platform to bring on investors and do the KYC and AML processes, which are essentially verifying who's investing and where that money's coming from to make sure that it's all legal. On top of that, Securitize also acts as the digital blockchain-based transfer agent. And this is essentially where they can take agency of those shares and manage that for different investors. And so they're the ones on the back end making sure that these transfers are going through, and it's going to be instrumental for Exodus as they look to list, supposedly in the next 60 days on potentially exchanges all around the world. So we're going to have to see if that actually happens. But in the meantime, Securitize will be providing a lot of those services to make that infrastructure happen, working directly with Exodus as well as the marketplaces and exchanges. And because of all the work they've done, not only with Exodus, but with many other issuers in the security token space, I had to give them a big shout out this week.
Yeah, I mean, Securitize, I think, might be our most running winner of Company of the Week, I think, on the show. Almost 2 years that we've been doing it now. And that's because they seem to be a part of a lot of the highly spectacular and marquee events like Exodus. It was actually the largest Reg A plus offering in history to date since they changed the rules now. So you can raise up to 75 as of this year. And they fully subscribed that, as you said, using Securitize on their back end and powering their security tokens. A phenomenal choice and huge news for sure.
And how about you, Herwig? 93, what you got?
Well, I'm super excited to award my company of the week to Nolan Reynolds International. So this is actually a very reputable real estate firm that's launching a REIT in Miami. So though the company is based in Minnesota, I am proud to kind of call this one close to home because in fact, They are launching a $240 million offering, $73 million of which is going to be tokenized. It's actually available for investors through the eToro Capital Offer Board platform. That's their placement agent partner. And actually the project I think is awesome. It's very close to home because actually it's right across the street from both Kyle and I's alma mater, University of Miami.
Go Konings.
And they're going to be launching a 200 room hotel. It's called the Thesis Hotel. And actually they're going to have co-working spaces, 2 restaurants, a pool, and much, much more. So a really exciting project here in booming Miami. And of course, it's going to be tokenized so all of us can own a little piece of it from all around the world. I think a great use case. And of course, when I saw that, Kyle, I just had to call that my company of the week.
That's fantastic. I love that choice. 240 million, maybe one of the largest security token deals. I think it has to be the largest security token deal that we've seen. Very exciting that they're doing it here in Miami, Florida. This is the blockchain crypto capital of the United States, potentially even the world these days. So very exciting stuff. Exciting that they're embracing security token technology. Of course, it's a real estate property. We're seeing that real estate just continues to dominate the sector as of late. Not only to mention that we do have Exodus now doing some equity stuff as well, but just 2 really exciting security token offerings. More of these high quality assets we've been talking about for years now on the show, needing to bring high quality assets to the security token market to bring interested investors and enthusiasts from around the world. Love that choice. Very exciting stuff.
Congratulations, Securitize. Congratulations, NRI. With that, let's get into our top 5 things that you need to know from last week.
And moving into our top 5 segment, we kick it off with article number 1, which is Elevated Returns. They're launching a security token exchange. Now, this is coming from Elevated Returns CEO Stefan Debates, who said on Twitter that they will be launching within the next month. Now, if you've heard of Elevated Returns, you know that they are the issuer behind the St. Regis Aspen Hotel, which is tokenized on the T0 marketplace here in the United States. So it's very fascinating to see that they're going to be launching an exchange. It's going to be based out of Thailand and is focused on security tokens, and they're taking steps to make sure they're going to be very compliant and following all regulatory constraints there in Thailand. But they're going to be launching their own security token exchange coming soon.
That's huge news. I believe Elevated Returns has a much larger real estate portfolio than just the St. Regis, so we can expect a lot of other great tokenization projects, especially given their pioneering status that they did with the St. Regis Aspen token. And on top of that, we did get a little clue from Stefan on Twitter that there will be a free token airdrop associated with this launch. So for sure, we'll keep you updated on the show. One can only speculate. It'll probably be a little bit like a BNB token, if you're familiar with that with Binance, a utility token to help essentially transact through on the platform. So not a security token, not like T0 where you might be entitled to some kind of a profit share. But who knows? We certainly don't have all the information there. But definitely that's why we felt number 1 thing you should need to know.
More security token platforms and marketplaces, the better. And moving on to number 2, we're talking about Gary Gensler. He came out and had some thoughts on crypto, didn't he?
That's right. Now, we've all been focused on Gary Gensler because he's the new chair of the SEC. So he has a lot to say when it comes to how the SEC is going to be regulating and getting involved in the crypto industry. And one of the big hot topics is, of course, well, what will he do to carry on the previous term? Will they continue to be very focused and vigilant on ICOs that violated securities laws? And according to an interview on CNBC, it certainly looks like that'll be the case, as Gary Gensler himself said that he speculated that most tokens are indeed securities and that they will be heavily enforcing the securities laws. So that's a little bit of an insight that we can get there, that how they're going to be involved in the crypto. But the SEC did say that they intend to be technology neutral. That's not a surprising stance, given that Gary Gensler was actually a professor at MIT teaching about blockchain technology. So he's certainly not anti anything in this regard. And the other thing that was very interesting was he did mention that the SEC will also be focusing on a lot more social media related interactions with stocks and securities and the like. So be sure things around Robinhood and Wall Street Bets and all those things will probably be coming into the scope of the SEC as well.
Yeah, I found a couple small little tidbits that were interesting here. The first one is that he did specifically differentiate between calling cryptocurrencies actual currencies. He specifically defined it as crypto tokens, which I do think is interesting. And the reality is that for the most part, currencies is not probably the proper way to define a lot of what we're seeing in the crypto space. space. And so that probably does make a lot of sense, but fascinating to see that he is already trying to begin to make those distinctions from a semantics perspective. And then on top of that, you totally mentioned, right, he's focused on manipulation of securities and of these trading assets, looking at social media, trying to protect the First Amendment rights. Again, he does specifically mention that, but he does say that there is some cases where manipulation and fraud is happening. They're going to be trying to crack down on that. So based off of those statements, you can kind of predict where the SEC is probably going to be focusing a lot of their attention here in the first part of their term.
And it's funny you brought that up. That's a big topic in cryptocurrency, right? What do we define these various different types of tokens? The SEC calls security tokens crypto asset securities. So for sure, I think it all could use a little bit of freshening up. And it's actually so relevant for number 3, where we have Binance and BaFin, who, if you've been following along on the show, are in a bit of a tusk here about whether or not they are allowed to trade tokenized stocks. So a few weeks ago, Binance launched and opened up trading for international investors to regulated stock investments through tokens. Essentially, you could buy Apple, you could buy Coinbase, you could buy Microsoft, MicroStrategy, and others through their platform, and it was powered through a partner in Germany called CM Equity, who claims to have all the right licenses and capabilities in order to offer and power this technology. However, BaFin, the SEC equivalent over in Germany, says, nah, not the case. They say that specifically, the tokens trading on Binance was itself sufficient to make the tokens represent a security or an investment product. So regardless of this partnership with CM Equity, it does seem like the regulator in this case is putting all eyes on Binance's interface and their capability of allowing investors to participate. So for sure, this is not over because they have a week to delist all of their tokenized stocks or potentially face fines or continue, of course, to appeal the process, which from their perspective, they say that they're actually not doing anything wrong at all.
Yeah, that's not all. They clapped back hard. They went to the BaFin and they said specifically that these are not securities because they are not transferable to other exchanges or to other users or individuals, and they're operated by a third party. And I'm going to be honest, that sounds like a pretty flimsy argument to me. But on top of that, it also seems kind of against the whole security token blockchain crypto ethos, right? This self-custody, ownership of your own things, global access, all these kinds of components that we've talked about and have been cited by everyone around the industry, from investment banks to financial service providers to interested enthusiasts, entrepreneurs. Everybody loves those concepts, and Binance is pretty much saying, we're not allowing those things, which allows us to do this. And I don't know if that actually makes a lot of these enthusiasts that happy. So we'll have to see how this plays out.
And who knows if that's just them trying to navigate the regulatory climate that's over there in Germany, right? But at the end of the day, it's very relevant given that there are other crypto exchanges doing the same exact thing. And we're, of course, going to keep you updated on whether or not these tokens get delisted or whether there's a development on this.
You're going to hear about an update next week, sounds like.
Moving into number 4, most likely. We've got BitGo. BitGo has been acquired, $1 billion, $1.2 billion specifically in aggregate by actually Galaxy Digital, a major player in the cryptocurrency space. And actually, they are basically improving their business overall. BitGo has trust companies in South Dakota, New York, Switzerland, and Germany. They've got over 400 coins that they support via their custody and over 400 institution clients, $30 billion in assets under management, and over 150 partners, exchanges that they work with. So that's a major acquisition. Just on the heels of Coinbase doing a public IPO, it certainly seems like the blockchain and crypto industry is heating up, Kyle.
Yeah. Galaxy Digital is a huge asset manager for crypto assets. They've got all kinds of institutional products that are listed on the Canadian Stock Exchange or private funds and all these different things. They not only need the access to the exchanges to be able to make these purchases on an OTC on a large scale without causing massive slippage and price discrepancies, but then they also require them for the custody aspect and the security. With that much assets under management, that they've got billions and billions of assets under management, they need to have a supreme custody agent that's going to be able to make sure that those funds are safe. Because as we're going to talk about later in the main episode, crypto is not necessarily safe if you're not taking the proper precautions. And as a large institution, that's got to be on the forefront of their focus.
BitGo is definitely easily one of the leading and largest custody solutions in the world for cryptocurrency. So this is a powerful addition to the Galaxy Digital conglomerate.
Absolutely. And going into number 5, we have another Miami property that is getting into the crypto and blockchain space. Unfortunately, they're not in the security token side, but they're accepting crypto. And this is the condominium Arte, A-R-T-E, that is in Miami, and they're now accepting crypto as a payment, specifically Bitcoin and Ethereum, using the Solid Block payment processing platform. And so Solid Block was the platform behind the St. Regis Aspen deal as well. So these guys have done this before. They're comfortable with real estate and tokenization. And so Arte is dipping its feet in now by accepting crypto as a payment. $10 million minimums for these condos.
Yeah, it's considered one of the most ultra luxury apartment buildings or condo buildings in all of Miami. And actually, they specifically have also gone in line with cryptocurrency. They're saying that half of the world's billionaires, when Bitcoin hits 200K, will be crypto billionaires. And so they're positioning themselves to support that through the technology that Solid Block enables them to do. So just like you said earlier, Kyle, I definitely think Miami is turning into the crypto capital of the world.
Absolutely. Very exciting stuff. And that's our top 5 news. Herwig, how about you take it away for the industry section?
Let's get into it. Time to get into the rest of the news in the industry, starting off with some activity out of Hong Kong. We previously heard a few weeks ago that the Hong Kong Virtual Asset Exchange, or the HKVAX, had partnered up with Magic Circle, which is an STO solutions provider also based out of the area. And now they've gone a step further and teamed up with yet another STO provider, this time known as TerraChain. These firms help support issuers with tokenization, and now those clients can presumably list their tokens on HKVAX. You love to see industry partner up to develop a healthy security token ecosystem here. And there's also another great article from Peter Gaffney on the Security Token Market blog, where he discusses NFTs in virtual reality as a tokenization play. So in the 17th edition of Tokenize This, you'll learn how NFTs will be the future of virtual reality. And we've also got an article talking about DeFi, disintermediation, and the regulatory path ahead on the Regulatory Review website, covering the DeFi landscape and how regulatory bodies will address the growing technology. The article does well to warn that just because DeFi isn't designed around current regulation, it doesn't mean it won't be enforced one day, potentially retroactively, as we have seen with the SEC and ICOs in the past. The eventual demand for DeFi protocols to support compliance efforts to prevent financial crimes and enforce consumer protection may well be upon us soon. And now for some events. We first have a wonderful session on security token custody, hosted by Polymath, featuring executives from on-chain custodians, Bloxon, and Digivault. You can sign up for this webinar and attend on Tuesday, May 25th at 9 a.m. And a week prior to that, we've got the Digital Securities and Tokenization Summit, hosted by DigiShares and sponsored by T0, Polymath, and Tech Fund. Kyle and myself will actually both be on panels alongside executives from many of the leading companies in the industry from all around the world. And I'm actually moderating a panel on security token exchanges, featuring executives from both BlockTrade, iStocks, and T0. It'll be an awesome 2-day virtual event starting on May 19th. You can register at fintechdisrupt.io. And finally, of course, I want to remind you about our clubhouse room called the Security Token Speakeasy. So if you're on the app, we've got lots of great content being programmed, and we have our weekly breakdown of the Security Token show every Thursday at 5 p.m. Eastern. So tune in and listen to our guests from the industry break down our topic, which this week is, of course, about security tokens being safer than cryptocurrencies. And that's the rundown now. I don't know about you, but I'm ready for Kyle's STO market updates.
Our first 2 security token offerings this week are both from companies issuing gold-backed tokens. The first comes from Japal Gold, who is launching the JPGOLD security token offering. It's issued on the Ethereum blockchain and backed by gold from various mining sites in Africa, which is stated to be where nearly 50% of the total gold production comes from. This token follows a similar structure where you're basically betting on a gold mine. We've seen this before. As the mine pulls out more gold, your asset will appreciate in price accordingly. The announcement doesn't give much insight into the mines themselves or the plans to harvest the commodities, so I would definitely recommend checking out the white paper to dive into the operations a little bit more thoroughly if you want to check out this deal. The other gold-backed security token this week comes from eMoney Bank in collaboration with CBDC developers SuperHow from Lithuania. The network they've built is called the Goldcoin Reserve Network, which has a gold-backed stablecoin and an extensive network of staking products, providing participants with nearly 10% of the mining fees generated in the protocol. They're looking to also build security token infrastructure on top of their existing blockchain solution, so you should stay tuned for that coming soon. Next up is Vuzel Media with the launch of the VUCO security token. The Swedish company will issue its security token in the Singaporean jurisdiction, which represents equity in the underlying company. And the new streaming platform has an original content lineup on top of a decentralized media platform to add new content and drive traffic. So you should check out the soft launch at vucoin.com. That's vucoin.com, excuse me. And finally, we have an update from Relio, who has launched a staking rewards project for its equity token. You can now use the platform's stablecoin or equity in the RST token to receive huge returns and for these loans. It's some pretty technical stuff, but fascinating as a product to build liquidity for the underlying token. You can check that out. And right now you can literally get like 80 to 100% APY for staking, so it's pretty fascinating stuff. And moving right into our market trading segment, we're kicking it off with the news. And Security Token Market has published its April 2021 real estate report. The market cap for all tokenized real estate currently tracked was about 25.5 million, which was pretty flat from last month. We saw 77,000 in trading volume, which is a small growth from March, led by the Aspen property, seeing 80% of the volume across the 15 that we're tracking. We're also seeing more activity from the realty properties than in months past, but the high gas fees on Uniswap are definitely killing the viability of trading right now. So that could be a big factor in the lower volumes. Finally, to close out our market news segment, it would not be an episode of the Security Token Show without a report from Crowdfund Insider's Omar Faridi, covering the security token trading market. With a security token market cap nearing 700 million and an average weighted return of over 11%, the market is booming, and Omar is on the cutting edge of it. Thanks for citing our research in your report, and keep up the great work, Omar. Now let's move into our secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. The total market cap this week is 687 million, which is down after weakness from Overstock and T0. We really didn't see much trading volume from the rest of the bunch this week, except for Blockchain Capital, which had another strong rise up to $19 per share. Folks, we called this here on the show. It's now in second place on the market cap standings, passing T0 for second on the list for the first time ever. Very cool stuff there. Finally, on the tokenized stock front, these shares saw over $7.6 million in trading volume in just the last 24 hours. Absolutely crazy volume led by Grayscale's Bitcoin Trust, which is actually pretty funny considering it's a derivative of a fund that owns Bitcoin, which you could just buy directly through the exchange. Instead of buying the tokenized stock itself, you could do that on FTX. Other high volume stocks included BioNTech, which is a biotech company making vaccines, as well as Coinbase, Tesla, GameStop, a lot of the usual suspects. Most of these tokenized stocks are trading very close to their public market equivalents, with a margin difference around 1 to 2% in either direction. It's fascinating to see how the public markets value these assets and how the crypto markets value them pretty similarly. So that's another exciting week in the markets. Do your own research and hit me up on Twitter to send me all your hot takes. And with that, it's time to send it back to talk about the main topic. Herwig?
And getting into our main topic for this episode, we're going to be talking about how security tokens are actually safer than cryptocurrencies. And actually, before we jump right into that, I think it deserves a little bit of a backdrop. We're, of course, talking about traditional securities investments, just like stocks. And of course, when you experience that, you actually were used to owning nothing at all. Of course, back in the good old days, you would get some kind of a physical paper certificate, right? But that's, of course, gone in 2020, 2021 today. In fact, it's mostly recorded on a digital registry, typically an Excel sheet or some kind of database software. And there's typically a third-party agent, usually called a transfer agent, managing and responsible for updating ownerships and cap tables and all those kinds of things. When it came to cryptocurrencies, it was the exact opposite. It was one of the exciting things that I think brought a lot of people to the table, to be able to own your asset and be able to move it around and freely take advantage of it however you like. Of course, that came with some downsides because it meant that if you were mismanaging your keys, you could lose your assets. If you didn't have the right security protocols in place, you could get hacked. Point being is it came with some trade-offs that might make a lot of people actually rather hesitant to want to participate into crypto at all. So we're here to tell you that security tokens, they are safer than cryptocurrencies. They are just like the best of both worlds, I like to say, where you get true ownership, but you get the advantage of a legal protection with it. Isn't that right, Kyle?
Absolutely. So let's talk about security tokens. And when we're talking about security tokens, again, we're talking about a digital representation of a real world investment contract. We're talking about financial instruments, and they're regulated in that way. So when we have security tokens, we're talking about securities. And when we talk about securities laws, we're following those set forth by the SEC or by any of the other regulatory bodies internationally. And so with these regulatory bodies, we manage a cap table. This is what would represent the ownership of an individual asset. So it's irrelevant for how these assets get hacked or stolen because we have this cap table. We know exactly who is entitled to what. This is important because you own shares of the company financially, as well as you may have voting rights or dividend opportunities, things like that may come along with ownership in these assets. But at the end of the day, we're treating these just like financial assets, which allows us to be sure that they're fully compliant, they're legal, they're regulated by bodies around the world. And that's super important for the adoption of the industry in the traditional financial markets, as well as from institutions around the world to take advantage of this technology to actually benefit the financial system in the way that we see fit. It's because of that, we don't necessarily need the immutable ledger for the transactions that happen. We need the flexibility in order to do these things, to pull things back and say, okay, let's take a look at how this happened and reassign these assets the way that they are intended to be based off of the individual owners.
You nailed it, I think, right? When you said that it was an investment, there's a contract. That's what's being examined here by the SEC or any government agency to say, okay, what was the agreement between buyer and seller or the investor? In the case of ICOs, right, we saw that especially on the DeFi level, on the smart contract level, there's pretty much nothing at all except for code working with each other. When we saw with ICOs earlier on, you might have remembered the term SAFTs, or Set Agreement for Future Tokens. Those were actually contracts, and many ICOs that issue SAFTs took under examination by the SEC because they were offering what looked like potentially investment contracts. And that's where you get to security tokens, where we're not shy about any of it. We're here to offer you an investment contract. We've got the backing of the SEC. We're gonna protect you, and this is a safe investment opportunity.
But that being said, we do use blockchain in the security token space. It's just a very different way. Right? Crypto leveraged blockchain in order to provide this ledger of transactions so that it would be permissionless, that you did not need third parties in order to facilitate those transactions. But the reality is, with regulators and with the fact that we're dealing with securities and real financial assets, we need that layer of compliance. And so for our blockchain needs, it's much more about automating the compliance and just sending the information about the actual identity of a person. We talked about securitized ID and the KYC, AML processes. A lot of that information is sensitive information, but it needs to be sent from many different parties in order to make a transaction happen. So blockchain allows us to make that process much simpler and move these things much more effectively, but it does also allow us the flexibility in order to not rely on the blockchain in order to re-roll some of these things and make this process go.
To your point, there is no getting away with sort of a permissionless, non-third party environment. There's always going to be some kind of a central entity involved, whether it's an issuance platform, whether it's a transfer agent or the issuer themselves who's legally responsible for verifying and ensuring this kind of information, or whether it's an exchange. They're always verifying all the different players in the ecosystem. So anybody who owns a security token at one point in time has been identified and verified by one of these various oracles, if you will. And that's what makes this a closed ecosystem. So the idea that I could go into this ecosystem and steal Kyle's token is kind of not possible because, or at least it'd be nonsensical, because I'm going to go ahead and leave a digital paper trail of my wallet, which I've been identified as, and I went ahead and I don't know, Manny somehow logged into Kyle's and then sent his tokens to my account, and Kyle would say, I did not approve this transfer, right? And then we would work with the transfer agent or the issuance platform, the technology provider, to say, you know what? These are tainted tokens. We can very easily burn or freeze and nullify those tokens wherever they may have been sent off to. And of course, print more. Mint some new ones, give them back to Kyle so he can reuse his entitled investment that he's legally protected to have.
So yeah, I mean, this is all great. The reality is a lot of this is technical stuff that for the most part in the security token space, you may not even deal with. Because on the front end, as the user experience improves, you're just going to see a digital broker that acts similar to a Robinhood or a TD Ameritrade, and there's going to have these aspects of the international transfer and maybe swapping from exchange to exchange with these wallets. But again, by having the transfer agent and some of these other intermediaries that can help make sure that this process runs smoothly, it does provide investors with the protection to be able to make sure that the transactions that they are happening are once approved by those individual investors, and again, gives you that legal protection to sue in case there's some issue that doesn't go according to plan.
Yeah, so of course we're not talking about any qualities of an actual token and their safety as an investment. Or of course, as you said, talking about the technology. And when it comes to crypto versus security tokens, hopefully you now understand that there is no risk when it comes to making an investment in a security token from a custody, from a holding and an ownership point of view. You're legally entitled to it. And that's why we think there is so much more potential within this industry. Anything left to add, Kyle?
I think that's where we can wrap it up. It's been an exciting show. We're talking about removing some of those risks, poking holes through some of the misconceptions led by the crypto industry. And I think it's been a great episode. So thanks everyone for listening. We've got a couple of things to round out here at the end of the show. We do a breakout session on Clubhouse. That's 5 p.m. Eastern on Thursdays, where we cover what we talked about here on the main topic, but we bring in industry professionals, we bring in people to discuss and have a cool conversation around it with unique perspectives, as well as a Q&A session for any listeners that want to jump in and ask us questions. You also can leave a comment on YouTube or anywhere that you're listening, as well as reaching out to us directly on Twitter, Instagram, or anywhere else that you can find us.
And of course, get all your latest trading information and news from stomarket.com.
So thanks so much for listening. We look forward to talking to you next week.
Catch you next week.